It's been a while, so I thought I'd do a quick portfolio update. I've now finally moved all my shares into my Trading 212 account. I've had them across 3 trading accounts, and to be honest, it's been a pain trying to keep track of the progress. They are now all in one place in the Stocks and Shares ISA, so no need to worry about including this in my tax return. The less admin is the better. My portfolio has now reached £100,000. Charlie Munger said the first 100,000 is a bitch, but he got to do it. He's not wrong at all, and this is £100,000, a bit more than $100,000. It should get easier from here, I hope. It is showing 90,000 invested, but it's actually around 87,000, as this includes reinvested dividends. The return should be higher, around sort of 13%, but I would still be happy given the volatility over the past year. I've done a bit of consolidation, exiting positions of underperforming stocks. One that has been on the chopping board for a while was AT&T. The stock has done nothing for years, and I do think Starlink is going to be very disruptive. The price of Starlink's service is only going to come down as it scales, and unless companies like AT&T can get a long-term contract with Starlink, they are going to be in trouble. Starlink is launching Starlink Cellular. No more loss reception is going to be a big selling point to customers. The other one was 3M. It did hit my sell price. The dividend cut was not great and definitely influenced my decision, plus taking into account the lawsuits and the length of time it's going to take the company to turn around its fortunes. Just didn't want to hang around any longer for the ride. Cisco is another one I got rid of. I was on the fence about it, but I knew I wasn't going to buy any more shares in the company, so decided it was time to exit. The next one was Bank of America. This one was the hardest to part with. The statistics have been solid, decent dividend and performance, but I've just not been tempted to buy any more shares in it, and I do prefer JP Morgan, which I intend to add to. And then finally, JEPI. I love the monthly dividend, and I would have been happy to hold, but the pesky regulations stopping me from buying more and new ETF fees introduced by IG Trading meant I had to sell out. I've reinvested those funds, though, mainly into the Vanguard High Yield ETF. Going down the list, I've now reduced it to 28 positions, with a couple more still on the chopping block. AbbVie, I'm happy with, but we'll only be reinvesting the dividend at this price. It needs to drop down to the 160s for me to add more. What I like about this platform is that it shows the gain loss and the FX impact. The FX impact is the impact on the exchange rate. If the dollar is strong, it is a better time to sell as a UK investor. As we can see though, now is not the time. Next up is Alphabet. I've been buying this slowly. I think this is a bit undervalued at the moment, so happy to buy at this price. Amazon, I will add to this again when it drops. Apple, I'm happy with it at the moment. It's a bit too rich to add at this price at $227. So we'll probably just reinvest the dividend on that. Coca-Cola is a slow burn. You can add to this at any time. It doesn't really go up and down by a lot. It's like just steady progress, really. Coinbase, no plan to add more. This will be fine after the next crypto bull run. Enbridge, I may exit this in the future. I've started to reinvest the dividends to bring my buy average down. Plus it pays a decent dividend as well. I'm not sure what to do with this at the moment. Intel, I will exit this once it goes back in the green. I'm not too happy with the progress of the company at the moment. Cutting the dividend didn't help as well. And it's a very, very long-term play to see if this can turn things around. Johnson & Johnson, I've started to reinvest the dividends to bring my buy average down. A bit like Coca-Cola, it's kind of steady and you can buy and sell at any time, really. JP Morgan, the plan is to build on this soon. Main Street, fantastic monthly dividend payer. Growing this organically with the reinvested dividends. Microsoft, same as Apple, a bit rich to buy at the moment, as low as below 240 at the beginning of last year, and price appreciation has just been crazy. It's just a bit rich at the moment. Next up is Neo. This is a recent transfer into the Trading 212 account, a long-term hold. Along with BYD, they will be leading the way for the Chinese EVs. Nvidia, I'm going to occasionally add to this. I'm hoping it stays below 120, and then I can continue to build on this position. It's not as high a priority as, say, Palantir, which I think has got a lot more room to run. Palantir could easily 10x over the next few years from here. More, really, because 10x would only be $350. It has a lot more potential, whereas Nvidia 10xing from here is kind of less likely after the huge run-up it had. But you never know, really. So I'm continuing to add more for Palantir and then buying Nvidia when I've got a bit of spare cash. Next one is Pepsi. I've really not added to this at all. I'm just stuck on one lonely share. I really like what they're doing with the Tesla Semi, introducing that into their transportation links. Not sure what I'm going to do with it, so just holding it for now. Pfizer, another one I may exit when it goes in the green. It just doesn't seem to be going anywhere, but I do believe in the products they've got in the pipeline. I'm just holding for now, mainly because I'm in the red, but they do pay a decent dividend. Next up is Procter & Gamble. I've started reinvesting the dividends in this one, always solid on all metrics, so happy to keep. Realty Income, along with Main Street, a fantastic monthly dividend payer, growing this organically and reinvesting the dividends. Starbucks and T Rowe, we'll be reinvesting the dividends for now. It's run up quite a bit recently, but I don't know if this is the resurgence for Starbucks or just part of how the general market has moved recently with the interest rate cut. I do like the new CEO they've got in place now. I think it'll be slow growth from here, really. So no rush to add to this. And then T Rowe, similar really. I think the rate cuts will help move the price a bit higher as well. Tesla, this is one for the long term. Stock is the king of volatility. It has just had a big resurgence. It will go higher until the robo-taxi unveiling next month. Then I expect a big sell-off, as that is always what happens with Tesla. Then my 3 Vanguard ETFs, the FTSE All World, ticker symbol VWRL. A new addition here that I will be building on. It has had really good price appreciation, as you can see, and it's one that I want to build on. Next is the FTSE All World High Yield ETF, ticker symbol VHYL. Not as much price appreciation, but you do get a better dividend. This was what I replaced JEPI with, now on 173 shares with this. And next, my favourite of the ETFs, the S&P 500, ticker symbol VUSA. High growth and a core component of my portfolio. The target is to get to 1,000 shares in this. I only have 123 shares at the moment. A long way to go. Next is Verizon. I will exit this position soon for the same reasons as AT&T. Visa, a position I have been building on. The metrics are incredible. I've mentioned it in previous videos. The compound annual growth rate has been consistently around 15%, now up to over 11 shares on this. Then finally, Walt Disney. Again, I will be exiting this when it's in the green. That wraps it up as usual. Thanks for watching, and I'll see you for the next one.